Morning everyone, welcome to the week, Monday the 31st of January. That's it for holidays for most people. Welcome back to the world again, but we continue onwards with our gold news today with the gold demand trends full year for 2021. The World Gold Council's full year demand trends report is out, and as usual we summarise for you. In short, a strong Q4 lifted full demand up a solid 10%. Annual demand recovered across virtually all sectors. The notable exception being ETFs, which saw net annual outflows. Interesting there. Full year 2021 gold demand, excluding OTC, increased to 402 LT, 4,021 tonnes, propelled by Q4 demand, which jumped almost 50% to a 10-quarter high. Demand recouped much of the COVID-related losses sustained during 2020. Demand for gold in the consumer-driven jewellery and technology sectors recovered throughout the year in line with economic growth and sentiment, while central bank buying also far outpaced that of 2020. Investment demand was mixed in an environment of opposing forces. High inflation competed with rising yields for the investors' attention. This for jewellery. Annual jewellery consumption rebounded to pre-pandemic levels, boosted by Q4 sprint finish. Annual jewellery consumption grew 52% in 2021, fully recovering the losses sustained during 2020. Rocketing Indian demand helped drive the fourth quarter total global wise to 713 tonne, the highest since 2013. In value terms, annual demand reached US $123 billion, to virtually match the 2013 record as well. Investment. 8-year high in bar and coin demand collides with annual ETF outflows. Annual bar and coin investment jumped 31% to 1,180 tonne, aided by record high volumes in US and Germany. Global gold ETFs saw outflows of 173 tonne in 2021, a 5% decline in total holdings. In Q4, total investment more than doubled as year-on-year, as ETF outflows were sharply lower than 2020, while bar and coin demand maintained its momentum. After 4 consecutive quarters of year-on-year declines, investment demand jumped 118% year-on-year in Q4. ETF outflows slowed to trivial levels, particularly in comparison with Q4 in 2020, while bar and coin investment continued to gain strength. Despite the significant uptick in Q4 demand, the net result for 2021 was a 43% decrease in total investment to 1,007 tonne. However, the last time gold ETFs saw annual outflows, which was between 2013 and 15, average annual investment demand was 901 tonne, 11% lower than last year. This highlights the extent to which bar and coin demand growth helped to offset ETF outflows. Central banks and other institutions. Central bank buying rebounded and developed markets rejoined the fray. Central banks added 463 tonne to global gold reserves in 2021, 82% higher than 2020. This pushed global gold reserves to just under 35,600 tonne, their highest for almost 30 years. Developed market central banks were also among the notable buyers. Central bank net purchases totaled 463 tonne in 2021. This marks a significant rebound in demand from this sector, following the decade low of 255 tonne in 2020. Buying was heavily front-loaded. 324 tonne was bought during the first half of the year, boosted by several large purchases, before slowing sharply to 139 tonne in the second half. Q4 2021 saw net purchases of 48 tonne, the lowest quarterly level of net buying since Q3 in 2010. 2021 is the 12th consecutive year of net purchases, during which time central banks have bought a net total of 5,692 tonne. According to the data from the IMF, global central bank gold reserves rose to just shy of 35,600 tonne during 2021, the highest level since 1992. Technology sector. Demand for gold in technology staged a rapid recovery in 2021. Full-year gold demand in the technology sector grew by 9% to 330 tonne, with year-on-year growth seen in all 4 quarters. A buoyant electronics sector bounced back from the 2020 impact of the pandemic, growing 9% to 272 tonne. Demand for gold used in other industrial applications also recovered, rising 12% to 47 tonne, while dental demand continued its steady decline with a 4% fall to 11 tonne. Supply. Total supply fell 1% year-on-year in 2021. A sharp drop in recycling more than offset higher mine production. It was the second successive year of declines and the first consecutive fall in more than a decade. Annual mine production increased 2% year-on-year, clawing back some of the pandemic-driven losses seen in 2020. The global hedge book is estimated to have fallen below 150 tonne, its lowest level since 2014. Full-year recycled gold supply fell 11% year-on-year, a reaction to the modestly lower gold price. And that's that lovely report there from World Gold Council, summarised for you here. If you want to check out some of those charts today, jump over to ainsleyBullion.com.au. I'll give you a little bit more insight to this great report. Also, jump over to ainsleyBullion.com.au if you are interested in purchasing today. Gold, silver and platinum. Interested in cryptocurrencies, jump over to ainsleywealth.com.au and goldsilverstandard.com. That's our own crypto there, built and backed by real gold and silver. Enjoy your Monday and start of the week, everyone. We'll catch you tomorrow for more news.